Good morning, welcome back everyone. Okay, we're going to do today's training session, which is going to be about a strategy which is called the Monday break. And before I go into that and I explain the kind of observations around it, I just want to mention about the training techniques that we discuss, and I tend to mention this, I think, practically at every training session, which is that each of the techniques which we've discussed in the training session, regardless of whether you're looking at individual candlestick formations or whether you're looking at the hook structure or trend lines or some pattern formation, is there to help us interpret the charts. And once we're able to interpret the charts, that allows us to make rational decisions about where we would like to take trade entries. Now, the best techniques are based around observations on price behavior, because what they do is they give us an expectation of future price behavior. So if we look at any particular technique, say we were taking a candlestick technique, we have historical examples going back for dozens of times when that particular pattern or formation has occurred, even hundreds of times. And every time we've seen that particular structure occur, then we've seen the same result. And so then this is almost scientific, it's very rational, that we have a positive expectation about what the future outcome is going to be. We're using those structures in order to determine what the sentiment is and what the real market sentiment is, what the thinking is in those buyers and sellers who are constructing the price. And by looking at their behavior now, we're trying to say, okay, what's their behavior in the future going to be? And once we've been able to determine that, that allows us to place a trade with positive expectation and with well-defined risk. That is the case with each technique that we discuss. And each technique has its own merit, right? So if we're trading a line, it means we're not trading a candle structure, although we will be aware of the candle structure that is forming. If we're trading a pattern, then we're trading that particular pattern, and it will be that pattern that determines what the targets are, and it will be that pattern that determines what the stop is going to be and how we're going to be defining the risk and what the future expectation of that particular trade is going to be. Now, today what we're going to be looking at, and this is why it's important to mention, is we're going to be looking at a breakout strategy. And this is a breakout strategy which is unlike any other breakout strategy. Most breakout strategies, what they're based on is usually a quantitative model. What that means is that at any point the price is going into a range, and so what you have is your kind of classic box trade. You will box off that range and you'll say, right, if the price is breaking north of this box, then I'm looking to be buying, and if it's breaking south of this box, then I'm looking to be selling, right? So it's a quantitative strategy just based on visual momentum, where you're saying, right, the price needs to break out in this direction, or it needs to break out in that direction, and if I see that, I'm going to give that chase. Now, these types of breakout strategies, they tend to have mixed success, right? So if any of you've ever tried trading box breakouts, my personal preference is that when I'm trying to trade a breakout and we have our kind of BCB structures, so you're better off looking for a continuation than a reversal. But if you're doing that blind and you are playing the continuations and the reversals, your chances of success are hugely reduced. And it doesn't matter whether you're trying to count the pips, it doesn't matter whether you're playing for percentages and looking for percentage R&R, it tends to get you into trouble, right? So the type of structure that we want to be looking for is a structure which is based upon price behavior, where we can say, you know what, I've seen this kind of structure before, I've seen this play out before, and I know that my options are limited. When I see this particular structure forming, I know that this is going to be the outcome, because historically, whenever I've seen this type of structure, that has always been the outcome, right? And that allows us to, and that's what allows us to get into a trade, right? So those are the kind of foundation stones of what I'm about to show you. It is to do with price behavior, and we are going to go and look at charts, and we'll see exactly what I'm talking about when we look at the charts. So the kind of breakout I'm going to show you is going to be, it's quite significant. This, incidentally enough, is not an original WMD observation, but it's actually it's actually a technique that was taught to me by a very good friend of mine, and she's an amazing trader. At some point, in fact, I may invite her to come into the room and show you some more of the techniques that she uses in her trading. But I've been able to use this technique that she showed me and apply it in my trading, and generally for perspective more than anything else. You know, I remember speaking with her, and I was showing, and we were kind of sharing thoughts and ideas and observations. And I said, "Look, how do you trade?" She said, "Well, I only trade on Tuesdays, Wednesdays, and Thursdays." I said, "Well, how's that?" Right? She said, "Well, I'll never take a trade on a Monday." But why is that? And eventually, it kind of came out, and she explained to me the technique that she was using to interpret market behavior, market sentiment, the direction of price for the week. And believe you me, every week, you know, she was taking some crazy trades, and if it was only one or two trades that she'd taken a week, but she'd ride that trade sometimes for 150 pips, sometimes 200 pips. It was a really crazy time that time, and she would just do it week in, week out, right? And she was only ever looking for the 1, 2, or 3 trades in a week. She was never looking for hundreds of trades in a week, but every trade that she took struck gold, right? And if it didn't struck gold, she was taking a very small loss on it, right? So like I said, it's a very, very good technique in order to determine market behavior. So having done that build-up and having built up your expectations far beyond probably where they should be, I'm going to explain what that technique is. The technique that she was using is something that she referred to as the Monday break. And I'm going to show you what the observation is. The Monday break is something which is really easy. It's really, really easy to chart. And the theory behind it is quite simple as well. It's not so much theory, it really is observation. The observation you will find is that in the first week of the month, you will often find that a significant high or low for that month has been established, right, in the first week of the month. So if you go back to the beginning of any month and you look at that first week, you will find that in that first week, it was either the high of the month or the low of the month, and after that, the price never came back to that level, right? This is a general observation. You'll tend to find this to be true 8 or 9 times out of 10, right? It's a very, very significant observation. In the same way, if we're looking at a week, for the week, the high or the low of the week tends to get established on the first day of the week, right? So it tends to get established on a Monday, and once that's been established, the break of that Monday candle tends to establish the trend for the rest of the week, if that is going to be a trending week, right? So if it's going to be a trending week, that trend is established based on a high or a low, which was established on the first day of the week, which is the Monday. So the observation that we find for Monday is that if you take price movement, right, and you're looking at the weekly open, and then on the Monday there's a high or a low which has been established, what you would do is that you would box off the high and the low of Monday's range. That is what you would do. And the first observation that we have is that the direction that the price breaks in, that tends to be the overall direction for the week. And during the week, sometimes you will get price pulling back to the breakout level, right? And this is the breakout level of the Monday range. And usually that area will start acting as support and resistance, and you can look for a continuation in that trade, right? So we're using the Monday high and low as our box. That's our range, and we have an observation about the price behavior when it breaks that range. And it's based on that observation that Monday tends to set the significant high and low of the week. And so on a week-to-week basis, this becomes something which is very, very tradable, particularly if the previous weeks have shown strong trend, and you can be looking for continuation of that trend as a result of this particular observation. The second observation that we have about the Monday break is that if you've boxed off the area of the Monday break and the price ends up breaking from that area and shooting off, and it doesn't come and retest that area, the following week you'll be playing exactly the same strategy. And if the price returns to that Monday high-low the following week, that level still tends to be very significant for support and resistance, right? So this is a technique. Once you're applying it on your charts, it gives you a very clear perspective in terms of price behavior and what kind of expectation to have, and then that's something that you can incorporate into your trading. The way I do this, I don't tend to trade this strategy blind, right? So I'm not saying, okay, because the price has broken the Monday range, it's time to take a trade. I incorporate other techniques which I have, so I'll use the trend walls, I'll use support and resistance, I'll use candlestick structures, I'll use the hook structure. But if I'm seeing the price above or below the Monday range, then I tend to develop a very particular viewpoint about what my future expectation is. And if it happens that the price comes back inside of that Monday range, then what she used to do is just leave it alone and say, look, the price is inside the Monday range, there's no break taking place, and if there's no break, and generally her idea was that if the price is inside the Monday range, then it is exactly that, it ends up becoming a range play. So you're buying the low and you're selling the high until it breaks, right? But as a kind of general thinking, and to add a bit of dimension to it, you'd say, well, there's no momentum because there's no break. The price is staying inside. The price is staying inside of the Monday range. Pretty similar to how we look at things with the Sunday opening range, and we say, well, if the price is inside of the Sunday opening range, then you want to leave it alone. But that Sunday opening range is a quantitative strategy, right? We're just saying, well, that's the opening range if the price is above their tech long, if the price is below their tech short. We're looking at it from the perspective of a weekly candle, but this Monday range break tends to be very, very significant whenever it takes place, right? It tends to be very, very significant. So I'm just going to turn towards some charts. I'm going to demonstrate the observation to you, right? And after that, then you know exactly what to do, right? So once you've seen the observation, you'll appreciate it as an exercise. After this session, it would be worth opening up charts and take any number of pairs and just go back week by week by week, marking off the high and the low of the Monday range. There are some nuances to this, and generally it tends to be that when she was applying this technique, she was taking Monday from 12 a.m. to 12 p.m. UK time, right? That was the area. That was the area generally that she was boxing off. It's a small nuance. It's not that significant, but just something that you may want to be aware of. So I'm just going to show you now on a chart, and like I said, after it's going to be worth your time and effort to go back and to look at this on different charts and just box off that Monday high-low range and see this observation which I've shown you. See it play out, and once you've seen that observation play out several times, then it'll almost become second nature to be kind of aware of the proximity of price in terms of its relevance to the Monday range. Okay, so here we are on the Euro USD. We're looking at the weekly. We're looking at the hourly candle. I'm looking at the hourly candles because if you press Control Y on your keyboard, it brings up the period separators, and that kind of makes it quite easy to count. That makes it quite easy to count Mondays, Tuesdays, and Wednesdays, right? But if we just start by looking at this week, and so here is we're currently in Tuesday, so this is the Monday range. And so we can see that we can see as far as price is concerned, we're squarely inside of that Monday range, and we haven't broken the Monday range, right? Which would mean no play. Not only that, we're at near enough the weekly open price, right? So or Friday's closing price, and that would have us leaving it alone, right? Okay, here we go. So if we go to last week. Extend that a little bit. There we go. Right. So this is looking now at last week, right? And I don't just want to look at last week. I want to look at the week before that as well. Okay. So here we are in terms of observations, right? So we're just looking at we've marked off the current week, and we're looking at the last couple of weeks. Here's our Monday range forming in this price area here. There's the high, and you can see that that high ended up being the significant high for the week. Here is the low marked at this particular level. You can see that with the candle, and in fact, if I extend that across, what you're going to notice is that when the price pulled back to that area, you can see where she found resistance later in the week, right? So once the price had broken out from that area when it pulled back, she found resistance at the Monday high low, right? You can see that, and so there's the first observation. Here's another, and now if we're looking at last week, there's the range for the Monday, there's the high, there's the low. Once the price broke out, she carried on straight through that region, right? And she didn't look back. What happens if we extend this box is we can see that this week, when the price has come back and it's retested last week's Monday's range, she found resistance at that level, right? So here's another observation which is kind of proven true, right? So you can see the kind of general idea here in this observation that once the price breaks that Monday range, you could be looking at quite a significant trade, and you're looking to trade that over the course of the next 2 or 3 days, right? So you initiate that trade on Tuesday. You could be looking to hold that trade through Tuesday, Wednesday, and Thursday even, right? And looking really to try ride the trend the whole of the week. That Monday high and low tends to make very good support and resistance level. In fact, if all you were doing on your charts was just boxing off previous Monday's highs and lows, whenever the price is reaching one of those levels, you can be pretty much assured that you're going to have a very, very decent trade, or you're going to be playing with a very, very decent trade. You do have instances where the price ends up going into a range and she ends up ranging in that. You also have instances where you have false breaks, right? So you'll have a false break and the price goes back inside of the range. These are little nuances and you kind of get used to the idea. But on the whole, as a strategy, it tends to make a very good play. If we go further back, and again, just going to highlight the Monday high and the low, you can see the significance of the break. You can see the significance of the break there. Right, so hang on a second. This is the high and the low is here, right? So you can see that the price pipped through that area. She pipped through by about 20 pips, but once she broke down, you had that breakout candle through the range. She didn't really look back and she just carried on. And if we go back, and really I recommend that you do this, just go and mark that high and that low. Right, so there's the high and low of the Monday range. We've now gone back all the way into April, right? And again, you can see once she broke north of that, it generally set the direction for the week, right? And when she pulled back to that region is acting as support. Here it doesn't act as support to the pip, but very often you will actually see it do that, right? So like I said, it's a little bit of a question of assessment, right? But once you've assessed that situation, it gives you perspective on the chart. It gives you perspective in terms of expectation to have for future price movement. So you can go back, literally you can go back for weeks and weeks and weeks and do that. And the only time you'll find this strategy was a little bit of letdown was probably in December, right? So you'd have to go and December, you can understand it's holiday season, right? So the last couple of weeks of December, the first few weeks of January, it's a little bit of an odd play, right? But nevertheless, it makes for a significant play. If we take a look at another chart, let's take a look at GBP JPY. Right, so I'll just bring up the period separator, and again, if we're marking off, if we just start off by marking off this week, there's the Monday high low. The price did kind of tip out of that, but broken back into the range and kind of holding in the range. So you want to see what direction this price breaks out in, right? That's going to be the important guide for GBP JPY this week as far as this strategy is concerned. Here we mark the Monday high and low for GBP JPY last week. I wanted to bring up this chart because she had been in a rangy movement the last few weeks. So I thought it'd be quite an important one to take a look at. But you can see the Monday high low. You can see the significance of the break there. Again, if we're looking at GBP JPY for the week prior to that, you can see the initial break was to the south. She was never able to break north after that, although sometimes you do have that happen, right? So it's not a case that if the first break is to the south, you're not gonna get another break to the south. But you can see the kind of trading opportunity that was apparent there. In any case, either you were trading that first break, or if she pulled back, you were looking for the level to hold as resistance, and still it would have netted you. It could have still netted you a handful of pips. If we're looking at the week prior to that, right? So there's the high and low for the week prior to that. Okay, so again, you know, she stayed inside the Monday range. She was staying inside the Monday range. What it would mean is sit aside and do nothing, and it only becomes significant perspective-wise once that Monday range is broken, because that means the instrument is trending. So you've got lots and lots of charts to play with, and I would go away and start applying this technique and use it to develop some perspective in terms of where the price is heading that week. I've mentioned this before in some training sessions. It's always good to be aware of the proximity of price to the daily opening range and the weekly opening range, and so we're just adding to that and saying be aware of where the price is in proximity to the Monday range, right? Because it tends to be very, very significant, right? So if you go away, you chart it, put it on chart, and you'll notice these observations. Number one, that the break is significant. Number two, that when the price pulls back to that level, it tends to act as support and resistance. And thirdly, it's support and resistance. Even if she pulls back a week later, sometimes even 2 or 3 weeks later, you'll notice that it's that same level that she's going and hitting, and it's that same level which is attracting the price. Okay, fellas, that's what I wanted to cover. So I will take some Q&A there. Just give me a second, and we'll stop the recording.